Right, everyone, welcome back. We would like to press on. We have another excellent panel. I should also take a brief moment to thank Tony and all of the other contributors to the previous panel before the coffee break. It was extremely informative. I hope you managed to catch anyone who you didn't get a chance to ask a question to and quickly have a word with them in the break. That's what they're for. So what I will do now is I will briefly introduce the panelists for our next session. I will also leave it to Anna to give more detailed institutional affiliations and so forth. So we have on the topic of development finance in flux. So we go from discussions about a structure of global governance through trade tied to one international organization that's paralyzed by its rules, to a different field where there's a multitude of competing international organizations, both regional, international, from east and from west. So in this sense, we should be seeing a lot of different dynamics to the ones that the previous session addressed. So to begin, on my left, we have Cristina Fernandez-Duran. Next, Hans-Peter Lankes. And then in the middle, switching round, so they're not following the thing here, just as I noticed, José Maria Viñals. And then next, Emilia Saiz. Penultimate, we have Gabriel Yorio. And finally, the moderator for today, the next session, we have Anna Terron. So Anna, please, the floor is yours.
The opening words of a high-level meeting about the impact of international cooperation evaluation of the Secretary General, according to a friend I trust, where if international development had an impact, we would notice that. Having said that, let's go and let's try to evaluate it. Well, at that time, and I will not give the name of the Secretary General, but at that time, there was a consensus which lasted for many years now about the need to reform the international cooperation system. And we heard yesterday, and we hear here and there, how international development system is not working, blah, 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 blah. But at the end, what we are witnessing at this very moment, although, yes, we'd argue that the system reform was needed, is something which is not a reform, but I would call that a big disruption. If it's true that maybe international cooperation impact was difficult to assess, what we are clearly seeing today is the lack of international cooperation for development, or at least the lack of enthusiasm of some actors and the abandonment of international cooperation by the United States, by USA, is clearly something that is having an impact. I think that have to drive those who still believe in the international cooperation as something that has been delivering some goods to the planet, to keep it very short, in the past, to discuss what do we need to do from now, taking account of the big disruption we are suffering today onward, to have a real reform and to keep the impetus of big sectors of our societies and big part of international governments to commit with development. And I would put that in the following way. We are in a crossing roads momentum, and we need to think what international cooperation and what kind of development we need to work for. You come from very different organizations, from very different communities of thinking, of doing, and I would like to ask you, At this very moment, having in mind that we are in this crossroads, what are the needed changes in the architecture of development assistance? What are the trends you would highlight? What are the underlying causes and the major challenges of it? Thank you very much. The floor is yours, and we will start by Cristina and follow the order of the panel. And I skip introducing you because all the audience have your CVs, and I think we do not have to lose time on that. Thank you very much, Cristina. Thank you for coming. I know it was very complicated. Thank you for your reports. Thank you very much.
Thank you. Thank you very much. Thank you to the IBEI for organizing such an interesting conference, and also for the variety of the panel, which I find really interesting and enriching. So I work for Oxfam EU office, so I come from Brussels, and I'm going to give a little bit also the perspective from the EU level and the conversations we are witnessing today. So if we ask, I mean, in every and each conversation, debate we're having about development cooperation in Brussels, there's inevitably an automatic connection with the geopolitical dynamics. The narrative needs to be connected with Europe's interests, and the Europe first approach. And I would say even not only geopolitical dynamics, but what is the new buzzword in Brussels now, it's geoeconomics, and what President von der Leyen has announced as the economic foreign policy. No? So as all of us know, that now the big priorities are competitiveness, security, and everything has to be tied and connected to those big priorities. So indeed, conversations about development cooperation are linked to that. I will develop that further in other interventions, but this means scaling up on the global gateway. This means changing a bit the former paradigm at EU level that was equal and fair partnerships to more focus on investments, etc., etc. That's an important question to keep as a big trend. But then I also would like to point out something that I think the starting point for conversations about development cooperation crises and changes of paradigm, etc., are sometimes a financing crisis, are identified as a financing crisis. And I think this would be a lost opportunity, because of course there's a financing crisis. But if this is the starting point, then we're missing out the possibility to reimagine development cooperation, as the panel says, that a concept that I really like. And we are in a crisis, but I think we also need to seize this opportunity to think about development. So not only a donor perspective financing crisis, but also sustainable development, what has worked, what hasn't. And it's a conversation that has to be held hand in hand, or even ideally led by partners and countries from Global South. So what we are witnessing in the many different countries we work in as Oxfam and our partners is that the main focus is not only a financing crisis, it's an inequality crisis. And this is the focus that I think we need to bring on the table anytime we have these discussions. So I know we all have figures in our heads, but also because I think those need to be on the table, let's remember that nowadays 3.7 billion people live in poverty, that 3.4 billion people live in countries that pay more in interest debt than invest in education and health, and that if we were to achieve gender justice, we still have 125 years to go. So these are the root causes that I think we need to look at and address. And then we need to rethink the means to achieve it, actors to be involved, etc., etc. We can be as radical as we want, but the point is let's not lose our focus that the objective of development cooperation has to remain or even double down on ending poverty and reducing inequalities. Then if we want to examine what has worked and what hasn't worked, and I really like the point of what has worked, because it seems that it's easier to shift completely the narrative and say we had to change everything because nothing has worked, then I think we would lose the point. On what hasn't worked, very quick ideas that I can develop further. On ODA and aid, indeed, our analysis is that in the last 15 years, ODA budgets have been overstretched and diluted, because we've tried to include as aid many other things, as aid to curb migration, and then the purpose of ODA has been and its efficiency has been diluted. On private finance, and we have here the experts, but I think we should also analyze what has the results of the Addis Ababa Action Agenda, and why the billion to trillions strategy has fallen short. And when it comes to actors and as an NGO and working in an NGO, I think we need to be also very self-critical with our role. We need to look at how we can contribute to a genuine localization agenda. How can we work better with the private sector? Or how can we balance this very sensitive dilemma we are experiencing right now between putting forward our values and principles, but also acknowledging the geopolitical dynamics and realities, and being on the table discussing that. No, those are just some questions. But then also on narratives, I think it's important to acknowledge that we have failed somehow to put forward a compelling narrative that places solidarity before self-interest. And again, this is in our opinion, my opinion, linked to inequalities. What people in Europe think about aid and development cooperation has also a lot to do with the deteriorating conditions of life in the region. I'm running because I'm scared about these 5 minutes.
Don't worry, 1 minute.
Okay, great. So, just not to be only pessimistic and bring ideas and proposals. I think we are, because the multilateral system is not bringing consensus and the kind of consensus we need in this very important moment for development cooperation. What we are seeing is the emergence of some coalitions of the willing, with countries that are putting agendas on the table that advance questions like fighting against inequality. I'm thinking about the Sevilla platforms of action in the last FFD conference, but also how these coalitions of the willing are connecting the different multilateral spaces with now the G20, COP, etc., etc. This is something that is very motivating, and that is a kind of a positive solution that comes from the fact that multilateralism is not delivering as we would expect. I think I would leave it here for now, but thank you very much, Anna.
Thank you very much, Cristina. Probably from a different point of view, we can continue where she stopped, to let us know what do you think about what do we have to do right now?
First, thank you very much. Thanks for having me here. And I'm not quite going to answer your question of what we have to do. What I would like to do is identify two trends or two shifts that are taking place in the development cooperation field more generally, and they partly build on what we've heard. So yes, there's sort of a rewiring of the international development finance architecture, and it's not just since Trump. This has been coming, and Trump is sort of a very strong expression of it. The first of those is the shift in the political driver of development cooperation, and it's a shift from something that was more explicitly solidarity-based to something that is more explicitly interest-based. In a way, it's a spillover of my nation first politics, Europe first. You have all sorts of firsts at this point. Most visibly is, of course, the cut in overseas development assistance, official development assistance. So we now, according to the OECD, cumulatively 2024-25 is going to be roughly a 25% cut compared with 2023. And then there will be further, so the UK, for instance, Canada, others have already announced there will be further cuts going forward. So that's a very significant amount. It's about $50–60 billion that are going to be available, less available for development cooperation. That money, ODA, is overwhelmingly concentrated on the lower income countries. So, for instance, 2/3 of LDCs, for LDCs, ODA has been 2/3 of external finance. And it's overwhelmingly concentrated on social sectors, on health, humanitarian action, education, government, and civil society. Yeah? Now, with that decline in aid, there's also a broader shift in the financial cooperation policy of major donors. And again, I think that's a permanent shift. It's one that's been coming. It reflects a broader rethink that has been brewing, a recognition, if you want, that the vertical donor-recipient model of aid has run its course. It's become a bit of an anachronism. And what we see is this shift towards an interest-based narrative. Now, the question is that putting lipstick on a pig? Because there isn't any money, so you don't want to make it available there, so you rationalize it, and so you say, well, this is it's really about recognizing a more equal relationship with countries. Well, to some extent, maybe it is putting that lipstick there, but it is also, these mutual interest approaches also resonate quite loudly in the Global South right now. And I'm just going to give you a couple of examples. They resonate so loudly because there is a sense that we need to move away from that post-colonial dependency approach that was really concretized in this aid model. So one recent expression of that shift is the Zambian president, Hichilema, who said just now in October that good riddance, the cuts in aid, interesting to hear that. He said it was long overdue. He said it was a wake-up call for Zambia. He implied it was a wake-up call for Africa as a whole. He said we need to become more self-reliant, and if we continued getting this aid, we wouldn't. The other example I want to bring is from the Africa Expert Panel. That's something that the South African G20 has set up, chaired by Terron. I'm a member of that. And it's going to present next couple of weeks for the G20 leaders a report. And that report, the introductory line of that is a plan for partnership. So what can the world do for Africa? Partnership. It says, this is not a call for charity, it's a call for a new global compact that positions Africa as a pillar of a more balanced, prosperous, and resilient international order. So what we have there is kind of a sense that international aid implied a hierarchical post-colonial relationship. The reality today is that countries have become far more prosperous. There's a search for respect. We heard that from Andres earlier today. And respect means horizontal relationship, and mutual interest is a form of mutual respect. So, on the part of the donors, what we see connected with this shift is a broadening of the development cooperation toolkit, at least the intention to broaden it, away from this approach that was heavily centered on an aid vertical, including other aspects of the foreign policy toolkit, cultural policies, education policies, universities, visa policies, investment, of course, trade, technology, etc., and an attempt that we see very closely in the UK to try to get different parts of government to play together in foreign cooperation, in a way shifting the relationship between the UK and Malawi more in the direction of what it would be between the UK and Canada, which is not something which is centered on DFID, which is not centered on an aid ministry. What we also see is a shift, a very loud shift in the rhetoric, at least, towards a more private-driven foreign financial cooperation model, towards one that enables rather than finances, to one that supports domestic rather than foreign support. And that all may be driven by budgetary considerations, if you want, because it's cheaper to do this. But at the same time, it embodies a somewhat a different model of development that is more reliant on the country level. So that's the first shift that I see, towards an interest-driven foreign cooperation model. The second is kind of a return to what used to be sort of the two-gap paradigm in development economics, a structuralist view of development. And that comes out of the Financing for Development conferences of the UN. It comes out of the COPs. And the basic logic is there are global goals, development goals, SDGs, climate goals. They require investment. There's a lot of investment that's required. That investment needs to be financed, so let's see how much investment is needed, how much finance is there, and then the difference is a gap. And now the task for the international community, be it in the development field or in the climate field, is to find ways to fill that gap. And we've seen this now over about 10 years, since billions to trillions, going on in various ways. It's happening as we speak right now in Belém, where the Baku to Belém roadmap is all about filling a gap of 1.3 trillion annually from all the sources of finance that can be identified, and seeing sort of what kind of political will can be put behind doing that. That gap approach, there's an investment gap and a financing gap, is probably subject to the same critiques that the original two-gap model, which dominated in the 1960s and 70s, was due. It was when the market perspectives, prices came back, it kind of disappeared. It is subject to some of the same, but it's driven by a sense of urgency. It's driven by the sense that we have very little time. We need to deliver those investments. It needs to happen very quickly. In the context of Belém, what we've seen is finance ministries, a very clever move driven by Brazil, bringing together a coalition of the willing of finance ministers, the Circle of Finance Ministers, that has delivered a report just 2 weeks ago, which is meant to underpin negotiations on that Baku to Belém roadmap in Belém. And that report is a very comprehensive view of the various different sources of financing and what could be done to increase them. And one of the key sources, and I will leave it at that, one of the key sources where this is in practice really focusing on is the development finance banks, the multilateral development banks and DFIs, and it is the private sector. And on the DFI side, actually quite a bit has happened over the past couple of years, and we can talk a little bit more about that. We had a report going to G20 in September, and that identifies about $650 billion in additional lending capacity for the next decade that the development banks, the MDBs, have generated over the last 2-3 years in additional capacity to fill these gaps. We'll come back to that.
Thank you very much. And thank you all to stick to the 5 minutes, because otherwise it will be very complicated to do the follow-up discussion. And I would like to see some interaction among you, and probably, if we are lucky enough, some thought from the audience. José María, you can really take the point where Hans-Peter left it. Your experience in international development banks is long, and very, very important. The floor is yours for these 5 minutes, and then we can continue with the discussion.
Okay.
Thank you.
Thank you, Anna, and good morning to everybody. Actually, it's good afternoon already for international time zones. I agree with the setting that both Cristina and Hans-Peter have laid out. I think it's very appropriate, and I will comment based on my experience, let's say the experience of the last 10 years, not to go further in the past. But for the last 10 years, I have been looking at these things and working on these things from the perspective of an international bank, which is one of the two most international banks in the UK, which has a big presence in emerging markets and developing countries. And therefore, the developmental issues are very, very, very close to our business, but also very close personally to me. So that's one. And the other one, so I will have things to say about the role of finance and the financing gap that Hans-Peter was alluding to. And the other one is more with my previous public sector hat as co-chair of the something which is there called the UN, the GISD. That is the Alliance of the United Nations, which is focusing on the private sector work on sustainable development goals. So we have been working for the last 3 years, given the mandate of Antonio Guterres, who created this alliance, to see how the private sector can help in furthering, supporting the developmental agenda. And he asked us to co-chair the private sector side of the Finance for Development conference, which took place in Seville, and which was not only very well attended by government sector representatives, excluding the United States, but also by private sector participants from all over the world. And we had 1,000 business leaders and 4,000 NGOs, including yours. So I think that the key to many of the things we're going to talk about, and that's a word that you said, Hans-Peter, is partnership. Partnership across countries, but also partnerships across the sort of government and the non-government sector. And in the non-government sector, I put the institutions like Oxfam and others, but the business sector, because the business sector has the resources, the financial sector, but also many of the capabilities which are needed in order to further the developmental agenda. And when we talk about development, we're talking about people's lives, okay? And for organizations that align profit with purpose, at the end, it's always the lives of people which matter. So you need to make sure that you deliver on your business in a way which is also aligned with a purpose which serves society. I think that there are many companies which follow that. I've been fortunate when I work in the private sector to be involved in companies which do that. Otherwise, I would not have been there, or I would have tried to shape things in that way. I didn't need to because that was already there. But I think that's critical. So the developmental architecture you're asking for, it's a big piece, it's a big thing. But I would say maybe a couple of things. One is where the challenges are and where, some of the areas for work. And I will try not to overlap with what has been said before. In terms of the challenge, if we look at the development world, what we can see, if we go back the last 5 years, what we can see is that there's been COVID, which has affected mostly the countries which are the least developed, okay? And that stays because there has been an impact which has been structural, so that remains. These scars have not been healed. We have the debt problem. Many of these countries have a legacy of high debt, which needs to be tackled. And on top of that, we have trade. And we have been discussing in the last panel, which I thought was excellent, issues relating to trade, which are particularly important for all economies in the world. But for developing economies in emerging markets, this is something which is absolutely critical. And we have been talking about the challenges that trade is posing to them and will pose even more in the future. So these are three big challenges that the developing countries have. And on top of this, we have the cut in official development assistance with USAID and others. And many governments, as we know, they now have to reconfigure their budgets in order to pay attention to defense, to higher service of their public debt and aging societies. So the typical advanced economies, which have been providing a lot of support for development assistance, now they are cutting their budgets. And we have seen this in the United States, in the United Kingdom, and we are seeing it also in other very important sort of communities like Swedish, the Netherlands. They're shrinking their aid budgets. So what that means is that with a funding gap, which has been increasing regarding the Sustainable Development Goals, which has grown from $2.5 trillion per year 5 years ago to a bit more than $4 trillion now, and the public sector component shrinking, the private sector needs to step up, okay? So that's where private finance comes in, and I think that this is important. So that's point number one. Point number two, I will come back to the private finance part in a moment, but the key thing again is the partnership. And if you are in the private sector, you are going to be driven by risk-return considerations naturally, because you have a fiduciary responsibilities to your shareholders, and of course you need to consider all your other stakeholders, but of course you need to be mindful of not squandering the money of your shareholders. And there is where the alignment is needed between the public sector, which needs to define the policy frameworks that are needed for the private sector to play a role, and make sure that the policy goals are aligned with the risk-return equation that the private sector needs in order to invest. I will, if there is a chance, I would like to explain this a little bit more fully, because I think it's quite critical in this partnership, because it can work, and it's working already in a number of places, but it needs to be scaled up. Now, when we met at Seville at the end of July, at the end of June and beginning of July, there were 5 areas which came out from the discussions by governments, but discussions by governments were also permeated by the private sector input, and the Secretary General asked GISD to provide input, collecting input from the private sector, plus the work that we had done, to be put in the document that the governments discussed. And 90% of the recommendations we had was reflected in the outcomes document that they approved under the name of Compromiso de Sevilla, the Sevilla Compromise. And there were 5 areas there. One is for a better development architecture. One is the importance of domestic resource mobilization. When we talk about development, we talk a lot of the time about things that the world needs to do with developing countries. Developing countries need to do also better itself in terms of their domestic policy frameworks, to provide more confidence, to provide a better business environment, to be more attractive to both foreign investors and domestic investors. But there is also the need for domestic resource mobilization. This is something which the IMF and the World Bank and the Inter-American Development Bank, Juan Luis is here, Anthony here, have been insisting for years, but many countries basically raise, in terms of revenues as a share of GDP, between 5 and 6%. At least they should be raising 15 to 20%, okay? So again, and puts the onus on developing countries. So that's number one area coming from the Compromiso de Sevilla that we discussed with that. The second is the one I alluded to, which is the mobilization of international capital, cross-border capital flows to help those countries grow and develop in a way which is sustainable, both in terms over time and in terms given what the planet needs. The third is the area of international trade. And we have discussed it abundantly, and we know what the roadmap is. Extremely challenging, but extremely important. The fourth has to do with sovereign debt. And there are now initiatives going on. One is the Sovereign Debt Roundtable, the IMF, World Bank, and the G20. And the other one is the London Coalition, which is the private sector sort of financial group, which is trying to develop a better sovereign debt contracts, which made debt in developing economies and emerging markets more sustainable financially and more easily to restructure so that it eases the pain. So these are 4 key things that came out from Seville, plus a number of ideas about how to reform multilateral governance in particular, to make sure that multilateral and regional development banks can do a better job representing what the world has become, but also better partnering with the private sector at filling the investment gap. Now, in Seville, in the International Business Forum, which was the private sector part of the Finance for Development conference in Seville, we came out with a commitment to a number of actions which fully supported this agenda, and particularly on the scaling up of financing for sustainable development. And there are a number of things that need to fall into place for that to happen. We can talk about them later, but this is where the partnership between national authorities, between multilateral and regional development banks, in the private sector, both the financial sector and non-financial companies, which are investors in things like infrastructures, etc., need to come in together in order to develop what the private sector can give the most of in order to further the development agenda. So there is no single silver bullet. It's certainly pretty complex, but I think the important thing is that it's not mission impossible. It is mission possible, but a very hard way and hard work ahead.
Thank you very much. We will certainly go back to this very point, and we will also. I would also like to focus on what does it mean in Europe, because we have this global gateway opened at this very moment, and I think it's worth to reflect on what will happen with the private and public partnership in that area. Thank you very much. Emilia, I'm very happy to give you the floor now, because to pass you the floor now, because you are representing here sort of a optimistic part of the international cooperation, which is
I don't know.
Local authorities.
I don't know. Let me give you. I work with cities, local and regional governments, and so I love cities analogies. And I have one for this panel, which is this story is the tale of 2 cities, literally.
Okay.
So a positive one, like you are suggesting, but there is also a less bright one. Let us see how we do. If we go back to 2015, a moment where humanity was in a very optimistic mood, COP gave us hope that we were looking at development from the same perspective. We gave ourselves the Sustainable Development Goals and Agenda 2030, a very broad document that made us think that development was not an issue of the global north and global south, or the east or the west, but was actually our future together. That's where we stood. That is certainly where my constituency, local and regional governments, were when looking at the international situation. At that very moment, we were talking about these shared objectives, and we were looking at development as actual local action, as public policy, and obviously from our perspective, local public policy as a way to solve things. When COVID came, and I very much agree with my fellow panelists that the scars of COVID are very deep. I was last week with the mayor of Bogota, and he was saying to me, we have still not recovered, and you can see that in public transit, we still do not have the same number of passengers that we had pre-COVID, and in many other things, obviously. So I very much agree with that. Then during COVID, we discovered that development was not only not a shared version of the world, but that it was also not a linear progressive line, that you could really backlash. That rules were different in different places, that vaccines were distributed differently in different places. So the rules were not the same for everyone. And that created a new vision of the world. And I so much agree with you, Cristina, about what you were saying of the different perceptions that we have of development. And that is something that cities around the world, local and regional governments identify with. We have this polarized vision of what development entails. I very much agree as well with this solidarity versus interest, but I would also put in the equation the fight of democracy versus efficiency. And that is one that is really impacting development policies, is really impacting the multilateral architecture, and with it, the financial architecture. I'm saying that because in the whole decolonization narrative that I identify with, and my membership will certainly identify with, what we are missing is that it's not so much only about decolonization, but also looking at new finance sources, which are not that picky on how they finance. And I frankly have missed the power of China that is building most of the infrastructure of Africa right now without putting so many criteria like we were doing in the past. So, okay, this is a picture for my membership. And so there is a positive end to this, because we are convinced that if we were to look at the financial architecture from the perspective of local service provision and what you actually need to finance the local service provision of the future, we would be looking at a very sustainable environment. It would be a more decentralized environment for finance, and a very concrete environment that would answer to the actual needs of communities. It would have the component of proximity, and it would very directly impact life of people. The reality is we are really not there. If we all agree that around 60, and the ecosystem of the United Nations and the international ecosystem agrees that 65% of the actions around sustainable development goals need to happen locally, reality is that the revenues to do this are below 15% in most countries. In developing countries, it's actually 8%. In developed countries, around 35%. And the gap between revenue and expenditure is huge. And you can all see this in an observatory that we have on subnational finance, UCLG and the OECD. You can see the exact data. But the reality is that the gap is huge. And so in this context, what we are facing is the need for hard and soft infrastructure at local level. The finance gap for this soft and hard infrastructure is huge. And the development banks, but also domestic banks, do not have instruments that are fit to finance institutions like local and regional governments. In the Global South, you have many of the cities that have less risks than the actual national governments that they are situated in, but it is impossible to get loans without a sovereign guarantee, so we are dealing with that. On the other hand, that is not the only barrier for this change of framing of financing. The other barrier is that we really disagree also with private sector on what is bankable or not and what is financeable or not. We really deeply disagree as local and regional governments. I mean, there are great public-private partnerships, and in fact, most of our cities are breathing with these partnerships, most of the heavy infrastructure. But the reality is the part of the metro line, the part of the bus line, the part of the sewage that they are willing to finance is not what is needed most. And it's only a very small part that is going to have quick return. So we are still in this situation overall, obviously I'm dramatizing just a tiny bit so that you listen to me carefully. But this is a very big part of the picture. So while you are right that we have a constituency of local and regional governments that still believe in multilateralism, that still believe in the international development architecture, and that are willing to contribute to international governance because they know they cannot face the challenges alone. Although we have that, that's the positive part of the story. They are building their strategies around care. They are thinking of a new generation of local public service. Although we have that, the reality is that they are finding themselves with very poor access to finance, totally dependent on fiscal transfers from national governments that are below the 20%. And the international development funds are also below the 15%. When it comes to local action. So answers from our side, and I will stop there. I think we really, we will need to ensure that the development discussion is shaken from decolonization and solidarity into sustainability. If we don't tackle this together, we will not be able to tackle climate change. We will not be able to deal with climate justice and equality that we will need to face. And so if we need to do it together, there is a very big part of public policy that needs to be financed and needs to come back. And the danger of that is that whether we like it or not, there will be funding coming from places that are not democratic, not equality-driven, that will be defining how the cities of the future look like. And that's the very situation that we are at right now. I hope it changes after this conference.
Thank you very much.
One can hope.
Antonio, you have a new role now. Thank you very much, Emilia. That's being very, very, very interesting, challenging, and let's get back to that. Localization of sustainable goals is something that still matters, and that, we talk very much about it, but probably we do not land into the real question. Gabriel, you are in one of the institutions who work together with cities, who work together with a lot of different partners. Thank you to be here. And indeed, you come from a region which is the region in this part of the world. When we say international, we first think on Latin America and then to the rest of the world, being in this piece of land called Spain. And we are the Europeans pushing for this kind of cooperation. While we are talking, we have the EU-CELAC meeting in Colombia. Let's see what will come out from there. But the floor is yours to combine what we have been listening in this table and explain us from your own perspective and region.
Perfect.
Thank you.
And thank you for the invitation and the opportunity to be here. And maybe just allow me to start by saying a disclaimer. I just joined the IADB a year ago. Before I used to work at the government in Mexico. Luz Maria was my colleague there. So I participated in the G20 discussions. I also participated on the OECD discussions. When we started to reflect about what to do with the MDBs and what we were expecting to the MDBs. So now all the recommendations that I kind of provided in some way in those spaces, now I have to do it at the IADB. Yeah. So I'm facing a new reality and obviously learning more about what are these challenges and how to mobilize more resources in the region. The IADB, just to give you some context, is the main development partner in Latin America and the Caribbean. Together with the World Bank, practically we are the ones who provide most of the funding for the countries. And we have been trying to engage in all the recommendations that we received from G20, but especially in in financing tactics that were more visible after COVID. I think COVID was a breakthrough stage that make a call for the MDBs to be more participated in everything I already heard, more private sector bringing in the development strategies, more funding, more capital, more deployment, more development, etc. And that's when you start facing all the constraints. So let me maybe try to provide you with some trends or context that I have seen now at the IADB, but also are connected with all the MDB community, because we just have 2 weeks ago, we have the fall meetings, the IMF and World Bank meetings. Practically all discussions were about that, about the points that I would like to point out. The first one is everyone is expecting more scale from the MDBs. And if you want more scale, we need more capital. Capital comes from the government, from the countries. Countries don't have enough money, don't have fiscal space. So kind of there's no way out there. How to get out of that situation is very difficult. But there has been, I think, a silver lining there, because MDBs historically were kind of I will dare to say this, isolated from the private sector, side, especially from the banking side. So where the MDBs were dependent on the capital or equity that was provided by the countries. I think in the last couple of years, there has been an intense usage of partnership with the financial sector. That's important because it helps the MDBs to potentiate the amount of money that they can deploy in the region. If this is going to be enough or not, probably I would dare to say again, it's not enough. I was making, when you do all these estimations on figures, a couple of years ago when we were talking about climate change, we said, well, if we only devote all our assets to fight climate change, we just put together all the MDBs balance sheets, practically it adds around 100 billion US dollars. And the financing gap just to fight climate change, it was around 3 or 5 trillions. So there's no way actually that the MDBs can deploy all that money, and I'm not sure if we can actually grow our balance sheet in that magnitude. So we need to find creative ways to potentiate the resources that we have. So scale, in the absence of a capitalization, has been required from the MDBs to engage in balance sheet optimization strategies with the private sector. So maybe I can enter on those details in the following rounds. The second is how do we connect with the private sector? Usually what I learn is public sector in the MDBs, we're focusing on reforms, dialogue with the governments, private sector arms such as IFC or BidInvest, while providing lending loans or guarantees to the private sector. Now, I think there is an opportunity for synergies, and what synergy means inside or within the MDBs means that, for example, the infrastructure guys that are working on the reforms or establishing regulatory frameworks can actually benefit from the inputs that come from private sector who are hands-on and working on field. So I think that's something that the World Bank, the IADB is doing, and we are practically working on that in that way. The third trend that I think is starting to grow, I mean, in all the MDB community, is about governance of the MDBs. I mean, there's a huge burden or huge geopolitical pressure in the governance structures of the MDBs. Every bank is different, but most of the stakeholders are almost the same, with different chairs in each of the institutions. But the issue is, how do we bring more civil society participation, if we can support or benefit from other views outside the governance and give more voice to other countries or other stakeholders that don't have the same amount of participation. At least at the IADB, 51% is represented by Latin America and the Caribbean. So it has a strong position. But Latin America is not well known for to have a solid or unit view like the Europeans. So sometimes it's very difficult to reach consensus. But I think that's something that's starting to grow. How do we change the governance in the MDBs? and also how to make it less bureaucratic, because if you bring all these geopolitical views in the board and decisions that we're taking in the board, they will be reflected in the operations. And that kind of dependence from the operations to the geopolitical side, it makes everyone questions if the MDBs shouldn't be more kind of independent and focus on development instead of just, I don't know, that's something that I will leave there because now I'm part of the MDBs. Let me just start, maybe finish. The second is that I think it's there's a call for all the MDBs to work as a system, and there's a rationale there. We have like the global bank, which is the World Bank, IMF, with another mandate there. But then we have regional banks that are addressing almost the same issues in each of the regions. When you create like, it is not semantic, and it's not only semantic. When you bring them as a system, you kind of create like a consolidation of the bank balances. All the regional bank balances are together, and you can play with exposures and concentrations of each region, so you can exchange that, and you can actually increase your lending capacity. That's something that has value and has a number. At least for the IDB, we have done several exchange agreements with the African Development Bank, with the Asian Development Bank, with OPEC, even with OPEC, and we have been able to increase around $5 billion per year in new lending capacity. So we do think that in the next 10 years, we can provide $50 billion more to the region. Now there has been some new changes in the methodologies on the credit ratings, and we're calibrating that, but we can, I just make another estimation, we can increase up to 70 billion just for the region. So is that enough? I don't know, but maybe we can potentiate it with the private sector, and we can make some arrangements there, and we can mobilize more resources. And let me start finishing with this reflection. Each time we are trying to work with the private sector, especially on the financial side. For example, if we want to do co-financing with the private sectors, there is a structural issue or limitation that comes from the design of the current financial infrastructure, which is putting in danger the preferred creditor status of the MDBs, which are the underlying support of the AAA credit rating that provide us with the cheapest liquidity for the region. That's something that is debatable now. We need to be very careful how do we do it, but bringing the private sector seems good at some point. And that's, I think, where it got interesting, because thinking about how to potentiate all those resources, bringing the private sector, bringing more resources without putting in danger the preferred creditor status, that's what I think is the challenge now, and that keeps our mind at least busy for the last days. You know? So I will finish here. But...
No, thank you very much. I think that it would be very interesting to listen to you react to what other people have said. Before that, let me do something that it's making me a bit nervous. Is there anyone from the organization here who could provide us with water and glasses? Because I was trying during the coffee break to get the tables clean, but I was supposed that after that the water would come. Thank you very much. Thank you very much. We have. It is. You're right, and sorry for that. Like 25 minutes left before 2 o'clock, and I apologize to those who are not used to Spanish way of life for having lunch at that very time. So we'll try not to go over this already late moment for lunch for you. Cristina, so what I'm going to do right now is to drop one question to all of you to try to go deeper in what we have been discussing. Feel free to answer whatever you want. I only try to drive a little bit the thank you very much, the discussion. Cristina, you've been talking about inequality, and other panelists have been following this path. and underlying that this is very, very important. Let me ask you two different questions combining things. That the first one is, do you think that equality, including cross-cutting issues such as migration, we've been talking about that this morning in this very room, remain central on the agendas? And let me add to that, what is also having underlined in this panel, which is a cooperation between public and private in terms of development. And ask you, because you are based in Brussels, you are the one in the panel who's more exposed to this discussion, and add to that point whether the global gateway is a good path to follow in terms of including more actors in the equation, or it is a way to somehow divert public expenditure into an area in which there is still public money, but going private could mean less transparency and maybe a different focus on what are the objectives. Thank you, Cristina.
Thank you very much. I'll try to be brief in this. It's a big question. First, before entering into the more specific EU Global Gateway, and also as a reaction, and because I'm really eager to hear your reactions about some of the challenges we find when talking about private finance without being experts at all. Let me, in line with what Emilia said, expose what the challenges we're finding right now. If we, I mean, what we see is that the private, the private finance narrative and solution comes as a one-size-fits-all and as a silver bullet again. And we are concerned that while we think that, of course, it's an essential source of funding, and that is playing a key role in a lot of sectors, and we have plenty of evidence on that, there are some sectors or contexts where we still have the evidence on how it's not delivering or as expected. And very fast put two examples. One is least developed countries, and the other one is the provision of public services. On the least developed countries, we have, these are the countries that are most in need of development finance, and they received a tiny share of private finance because, of course, of profitability and risk. But OECD data show how only 12% of private finance reached LDCs, so least developed countries, and how in this announcement of 2015 billions to trillions, the idea was that every dollar would attract $2 to $5 of private finance. And a study has shown that the result of it has been every dollar attracting 75 cents, but only 37 in least developed countries. That's something, it's a big question where I think, because having conversations with DG ECHO, the humanitarian branch of the European Union, they are asking how can we attract private finance in humanitarian settings. So I think sometimes and you know they are asking that because they have a huge finance gap. But maybe the answer is it's not possible or not yet, and we have to go through the nexus to attract private finance. Then we need to find other solutions. And the second one is on public services, because we also have evidence on how sometimes the profit doesn't align with the public interest, and how in provision of education, healthcare, there can be very negative impacts on people being excluded because not able to pay, poor working conditions or environmental pressures, or even declining quality of services. So yeah, just to put that, these two big dilemmas on how then this can be addressed, and how we think that a public sector first approach is essential. If we bring that to what's happening nowadays at EU level, so the Global Gateway Strategy, yeah, well, yeah, if then through the questions there's need to give a little bit more context of what it is, but what our suggestions, to go directly to the point, our suggestions for a global gateway to be transformative, because as civil society, it seems that we're completely against global gateway. We're not, we're not, but we think that it can be a powerful tool to address inequality, but there are some questions that need to be addressed. And I would point out at three. One, and it's the most difficult one and most important one, the objective of the strategy should be reoriented, because if the objective is commercial and geopolitical and is not addressing reducing inequalities or ending poverty, then we will find ourselves in situations like the one where we have examined 40 projects of the Global Gateway, and the majority is benefiting European companies and not local companies. And this is not always in opposition, but in this case it is. And we can ask, why can't we have a strategy that puts forward geopolitical and commercial goals? It's perfectly legitimate and very smart thing to do, because the main source of funding for a Global Gateway is the EU's development cooperation budget. And as per EU treaties, as of today, this money has to be spent in ending, reducing poverty, and in the long term, eradicating poverty. So this would be a first, the most difficult part to address. We are also asking from the Global Gateway to have high standards, to the EU to have high standards on the due diligence rules and transparency. So every company that is eligible for Global Gateway should comply with EU law in terms of due diligence, and do no harm in terms of human rights and environment rules. And the third one is on democratic oversight, because as you mentioned, Anna, is civil society, but not only civil society. This is a strong ask from the European Parliament, and more specifically from the DEVE committee. We are asking for stronger mechanisms of to scrutinize the Global Gateway, for evaluations, because we haven't had any evaluations up to date, impact assessments, etc., etc. For now, there's a lack of transparency. There are good things and efforts like the 360 approach within the Global Gateway, and also the inequality marker. So a marker that is not mandatory, and we would like it to be mandatory, but that like a target on how projects are including inequality. The thing is that these very important steps have not the buy-in from the high political narrative. If you hear in the last Global Gateway Forum, President von der Leyen talk about the Global Gateway, she's not putting her emphasis on the inequality marker or the 360 approach, but more on a geopolitical and commercial strategy for today's challenges. And one last point that can close the circle is that while we think that Global Gateway can be a really good, and we are part as the Oxfam of projects funded under Global Gateway. So there's a lot of space and room, interesting room ahead of it, but it's also important to say that it's not enough. What we're seeing right now, and now we are on the on the run up to the next EU long-term budget, MFF, and in the negotiations of the MFF. And it's a very important opportunity to avoid having just as the development cooperation vision from the EU, only the global gateway or humanitarian assistance. That's what we have right now. And there's a lot of contexts, LDC, so least developed countries, but also fragile and conflict-affected contexts that are falling off the radar, that used to be receive development aid, that are not receiving, do not need humanitarian aid, but should have some kind of political steer and funding from the European Union. And I know I have to end now. Thank you very much.
Thank you very much, Cristina. Let's follow this discussion. Hans-Peter, there is something I would like to mention. I would ask you to include in the question, in the next question, which is climate and development finance. But the question would be, the European Commission looks like moving from a system which was very much top-down financement of projects, of action, to what looks to be the base of the global gateway, which is blended finance and guarantees. How can we ensure these instruments serve development priorities rather than becoming vehicles for financial engineering? And how can we include in that equation the new challenges we have had, basically climate change, which I think need certain ambition to be faced? Thank you.
Yeah, thanks. So on blended finance, I'll take that up briefly, and then I want to say something about what has been said here to my right. So on blended finance, it's been a big buzzword now for 10 years and more. The reality is far more limited. So the total amount, so the grant equivalent amount that has gone into blended finance over the past, in the past decade or so, has hovered around $3 or $4 billion a year. And that amount has actually tended to go down in the last couple of years rather than up. Yeah. So that's the grant equivalent. If you want to say the ODA share of blended finance is very small. Now, it is being used in ways in which it is meant to catalyze larger amounts of money. So the convergence database, which is one of the databases where you can look up blended finance, they identify about, I think, between $15 and $20 billion a year in blended finance overall over the past few years. That has also been coming down. Yeah. If you look at the multilateral development banks and their use of blended finance, it looks a little bit better than that, and it's probably been going up, partly because they're using it in a somewhat more judicial way. But overall, if we're thinking about the billions and trillions that we're talking about, blended finance is not yet a major factor, but it has been. It has played a big role in sort of the imagination, yeah? And as you say, in the EU's thinking. Blended finance is not being utilized in a very efficient way today. I can tell you, I was in charge of the World Bank Group's IDA private sector window for blended finance, which was the single largest source of blended finance at the time. And 60% of the blended finance that we did through the IDA private sector window was for senior loans. The rationale was typically risk. The rationale was we had to kind of lower the risk threshold in order to be able to fund in these environments. The reality was it was subsidizing senior loans. Now, senior loan funding means that the blended finance is stretched equally across the lifetime of a loan. Risk is not distributed equally across the lifetime of a loan. So if you were to do this in a much more targeted way, you could use blended finance more efficiently. The truth, though, is that we have. It is very hard to do it right. There's an information asymmetry that you're faced with blended finance. You don't really know what the thresholds are on the part of the private sources of funding that you work with, and you get so you end up with shortcuts, and those shortcuts have meant that blended finance hasn't always been used very efficiently. One result of that is that it's been systematically very difficult to make the case for blended finance with say, the political authorities. So to come to political authorities and say, give us more funding for blended finance, meaning helping the private sector invest somewhere, rather than giving it for girls' education in country X. So they sit there and say, so why should I do that? What is your value proposition? And the blended finance community, the international community in general, has not yet really been able to make that case convincingly. It has also not really set up a governance structure. Most of the MDVs today still don't have a governance on blended finance that separates the project decision making from the blended finance decision making, and that means that blended finance gets drawn into a subsidy competition very often. You see that in the climate area. You were asking about climate. So still today, quite a bit of blended finance subsidy goes into financing, solar power plant, utility scale solar plants in middle-income countries, which really do not require that. And it's partly because the MDB community is utilizing blended finance, and does the EIB does that, and the EBRD and the IFC and everybody does that in order to land deals. Yeah. So you have those different parts. I think for blended finance can play an important role, but it will have to be far better at selecting, at designing and selecting how it goes about doing it, and explaining the value added from a public policy perspective. Second point on blended finance, there are two types of strategies that always get mixed up, and it's really important to keep them apart. One strategy is what I would call an impact strategy. This is going into the lowest income countries, the highest risk environments, and using blended finance to create bankability in these very difficult environments. Yeah? There can be no expectation of large amounts of private financing going there. Yeah? There can only be an expectation that you manage to do projects that with an amount of subsidy that otherwise would not happen, and there is a good case because of that impact to do that. Yeah? This is not about mobilizing private finance. And then there's another strategy, which I would call the market strategy, yeah? Which is where you use blended finance to say create an investment grade capital stack in order to get say the larger international sources of private finance to go into these markets. There are many very high profile vehicles that do that today. Yeah? And there you can utilize blended finance in principle, say with BlackRock. Yeah? So there are a few players in the market, Allianz, BlackRock, that have set up large schemes like that. You can use the public subsidy to make to de-risk other funding sufficiently to bring them into those markets. It's a very different proposition, yeah? And we need to keep those apart. Last point I just wanted to make on just an observation on how we conduct foreign cooperation. And I mentioned earlier that this shift from a solidarity-based towards a more interest-based environment is actually one that has some resonance in the Global South, and it has that resonance in good measure because the old aid model was seen as being somewhat a post-colonial vestige, yeah? Where funding was used to actually impose priorities set in the global north. And this is an uncomfortable discussion for us to have. Yeah? So we say this ought to be to pass those environmental tests and standards. We say it ought to pass those human rights standards and tests. Right? Well, that is where in the Global South, the recipient countries are saying, why are you imposing those standards on me? Have I asked for that? And that conversation is one that is really at the core of this. Are we moving towards a more country ownership-based development finance model that is more horizontal in nature and less vertical? It will mean that we will have to step back on some of the priorities that we see that should be attached to that aid.
Thank you very much. I think I have to beg your pardon if we get 15 minutes from the lunch time to end this panel. It's being extremely rich and interesting, and it's hard to stop people from explaining and developing the speech. They would, but let me, Tony, is it possible to end that to 15? Okay, let's keep it short and easy. Thank you very much. Jose Maria, you brought into the discussion this private sector, public sector cooperation. And I would like to ask you about what mechanisms could generally redirect private investment toward countries and sectors with the greatest development needs, particularly in terms of development goals, sustainable development goals. And at the same time, I would like you to address the very point Cristina brought into the conversation about the risk of subordinating public goals to market logic and how this can affect the objective of international development actions. Thank you.
Yeah. Very briefly answering the second question, I think that we are far from a situation where the role of the private sector in influencing either public, total finance or development finance has reached a scale where that influence is overwhelming. So we are far from there. I mean, let's face it, in the context of the scarcity of public resources, the finance that will be coming to developing economies, emerging markets and developing economies in the foreseeable future will have to be mostly, but not exclusively, of course, from the private sector. Clearly, I think that you can think of three groups of countries, markets, in terms of financing. Those markets where the private sector is already financing sustainable infrastructures, for example, without any need for any public help. I could give you countless examples of infrastructures in Asia, for example, in South Asia or Southeast Asia, many of them regarding data centers, regarding energy transition, regarding exportability of energy across countries in the Asian region. A lot of infrastructure projects are there, which are being financed privately by international capital flows because the risk-return equation is appropriate and there is no need for anything. So that's going to flow by itself, number one. The second area is the opposite, is those countries where you need a lot, but the conditions are not there, right? Let's think, for example, of countries like Sudan or countries like Haiti. These are very, very tough countries, and the private sector is not going to invest there because they cannot justify that before their shareholders. There you need concessional money and big time because you need to support these countries in very difficult situations. Sometimes it's post-conflict, sometimes it's post-natural disasters, etc. So that concessional money would need to be there. And then the question is, do the multilateral regional development banks have the right amount of resources at a time where governments are scarce in terms of the resources themselves? So that's it. And then there is another sort of intermediate space, which I think is mostly very important, where you need to make sure that you get an alignment between what's needed from the policy point of view and what's adequate from the business point of view. And this is, as economists, we learn about incentives. And incentives basically tell you that if the cheese is here, the mouse goes here. But if you move the cheese there, the mouse goes there, right? So what you need to make sure is that the mouse goes there where you think you have the public policy incentive. And then we come to the world of blended finance. And we come to the world of, this partnership between local government organizations on the one hand, between private financial sector, between private non-financial companies, which would be partners in this project finance project, and the multilateral or regional development banks. And they need to find the most effective way of operating. Blended finance. Standard Chartered has been, over the last 4 years, one of the top 3 global users of blended finance. But this thing is bespoke. It takes 2 to 3 years to finance a project through blended finance. It takes a long time. You have to roll up your sleeves every time you go to a country. I can give you fantastic successful examples we have done in Angola, for example, in terms of solar electricity, $1.3 billion project, a project in Africa in terms of water safety, which have helped millions of people. It takes 2 or 3 years. You have to find all the risks, the project, talk to 100 different people, partners, and then it happens. But it's not scalable. So the question is, in the intermediate space, how do you work together with the local governments, with the international investors, and with multilaterals to make those projects happen at scale? And I think that part of the answer has been given recently by the CLO collateralized loan obligation issuance that the World Bank has made, which is basically trying to provide, this was your last category of blended finance. This is using financial engineering techniques of originate to distribute in order to bring loans to emerging markets, developing economies, as an asset which can be packaged in a way which is attractive to institutional investors. And this needs to be replicable, scalable and replicable. So I think there is a way there. It is extremely important. At GISD, we're doing the same with one of the top asset managers in the world for $1 billion blended finance fund of funds devoted to emerging markets and developing countries' infrastructures. So these things can be done. So I don't necessarily think there needs to be a clash between public policy and private interest if somehow the incentive structure of the public policy gets aligned to these risk-return equations. And there is one last thing which is critical beyond that. Countries need to get their home in orders. They need to make sure that there is rule of law, institutional strength, a business-friendly environment, as much macro-financial stability as possible, because otherwise investors just don't want to go there. So governments need to do something. The private sector needs to do something. Multilaterals need to do something. So in this case, it takes, I don't know if 3 to tango or to do some of the dancing, but at least you need 3 to do the dancing together to scale up private financing to move the needle further.
Thank you. Thank you very much. I have a lot of comments on that very last point. I spent 7 years by doing something called public-to-public international cooperation to get better institutions, to get better legislation, to get better governance, and to create the space for private investment. But what I can tell you is that the amount of funds allocated to those goals are also going down and down. So let's see what will be the result. Emilia, Sorry, I still think that you are the optimistic part of the equation. You were very much talking about governance issues in your first intervention. Listen, I would like you to work a little bit on what do you need from the point of view of a very active actor, which is the local authorities, regions, cities, etc., to, on the one hand, keep a certain autonomy to work together and to directly work city to city or region to region. But on the other hand, to work together with other partners, national governments, multilateral organizations. What is the set of tools you need to achieve those two goals, be more effective and more a global partner, aligned with other institutions, and at the same time to keep this area of enthusiasm, which is the cooperation between cities and regions?
Yeah, let me start with the positive part, because otherwise it might sound dramatic in terms of what we need. So on the optimistic part, and going back to the discussion on whether it is demand-driven or not, this new trend around the global gateway, etc. From the perspective of a global organization like ours that also has membership in Yemen, that has membership in China, in Turkey, in Nigeria, in Latin America, basically everywhere, we don't sense from our membership that they had such a big issues with the criteria that was put forward to them in the traditional structures of development cooperation. Translation. They wanted to get to equality-driven societies. They wanted to get to societies where human rights were protected. I'm generalizing, of course. I'm not talking about the Afghanistan of the Taliban, but there was an Afghanistan before the Taliban, and there was a Syria before what has happened. What our membership was complaining about, and then this fits very well in this new rhetoric, is we were very slow. The traditional system was really slow, and we were setting up parallel structures to actually deliver on the cooperation that we were providing, and that they had a problem with. So we were ignoring local governments. Humanitarian aid came in with their own institutions, with their own tracks, and did whatever they had to do, to be equal and human rights driven and everything, because the locals were not cool enough or wise enough or whatever enough to actually do it themselves. That part of the equation has driven us to a world where these people are saying, you know what, we might want to do our own thing. So it's not about the demand drivenness, but about the double rules that we have followed. We haven't applied the same rules everywhere. You still see that now with the conflict zones and situations that we are currently facing. And the danger of accepting that this is a demand-driven change is that right now, when we sit down at the United Nations and we negotiate new texts, we don't talk about equality or LGBTIQ plus rights, but we talk about family. We don't talk about development, but we talk about quality of life. And we are listening to different types of indexes that are then questioning a lot of the legacy that we were able to build together until 2015. So I find it a bit dangerous to fall into the trap of saying that it is solely a demand-driven process. It is, I agree, but there is a political vision behind it. And we need to be conscious of that political vision, because it is questioning a lot of the values that we have been sharing together. And I'm not talking about the global north. I believe those values were to a large extent in the global south. And the reason why I say that this is the positive part is because in my movement, we talk about a feminist-driven movement, whether it is a Turkish mayor that is heading our organization or a Chinese mayor. We are a feminist-driven movement. We are a movement that puts care at the heart of a strategy. We are a movement that defends LGBTQ plus rights, even if we have membership that sometimes raise their hands and say, well, we don't want to go there. So I think this is very positive. And if we could extrapolate this to the general development cooperation, this would be great. So now, in terms of what we need, in terms of instruments, we will need to link this discussion with general governance issues. You cannot talk about development and development finance if you don't address the very core of governance, of decentralization, of the ability of delivering of public service. If we don't do that, we will not have the vehicles to do that, and then we will have hundreds of Haitis. Haiti started to go down the drain after the earthquake. I don't remember if it was 2007, 2008. We had a strong membership in Haiti. And these people were asking for our help after that earthquake. And when the help came in, it was totally done ignoring the local infrastructure. The warlords came in, and we take it from there. It's handmade. It's not the only reason, obviously not. But there was a very large part of local governance that was ignored, that was not supported, that was not financed, and hence there we are. Nobody's daring go to Haiti. Obviously not the private sector, but public sector also not in the structures that we have. So we need to talk about decentralization. We need to talk about how to enhance revenue, on-source revenue for local governments. It is not possible that they spend 45% of the public expenditure, at least as a general line globally, and that they are actually only receiving, in the best of cases, around 25% of the income. That is not possible. And you cannot detach that from this deeper type of conversation on financial flows. And let me end with the more traditional instruments. We are asking for blended finance, and I think it's very handy what you said about the differences that we need to make on what the different type of blending is. Our greatest challenge is to manage to overcome the sovereign guarantee. In some cases, not in all the cases, but in some cases, this is really, really important because many of the cities around the world have better ratings than their national governments, and they still cannot take loans. So this is a big thing. I know that BID and CAF have been trying to explore some of these things. We are working with the European Union, creating a kind of fund that will substitute that type of thing. So yeah, it looks like blended finance will still need to be a part of the equation. We haven't thought of anything else. So BID is solving the access. And then what I said before about rethinking how we define what is bankable or not, because there is a very big part of public service delivery that will not have immediate return. And that is something that I think within the conversation of development, development partnership, I like to call it, not so much development cooperation, but development partnership. We will need to make sure that that infrastructure is complete if we want to avoid the increasing numbers of inequality that we see around the world, including in the global north, with the housing crisis and others. So instruments for finance, but also a redefinition of what the priorities are. And if we cannot make blended finance work, let us at least work on source revenues for for those hundreds of thousands of local governments around the world that cannot even raise their own taxes. Thank you.
Thank you very much, Emilia. Apparently, the big elephant in the room is not, it's not the big elephant being hidden, but being extremely present, because we are moving from finance to politics in almost every single intervention. Let's move to Latin America, which I think it's very much a laboratorium of what's happening today in the world. You have the temptation to ask you to develop something you're mentioning at the very beginning, and which is linked with what we have been listening this morning, which is how to work, what kind of action and what kind of financial instruments to achieve those actions you can get in a very polarized world, and in a very polarized world like Latin America it is today. But I would like also to add a more concrete question, which is, what are the most urgent reforms according to your experience, both in the government, but particularly in the bank, to achieve the goals we need to achieve, not leaving anyone and not leaving small countries and more vulnerable populations aside or behind?
Reforms of the NDBs or in Latin America?
No, what are the not only in Latin America. Sorry,
I'm gonna spend a lot of time.
very quickly.
Yeah.
Missing part
All right.
of the whole thing. No, what kind of reforms in financing development and in the bank we need?
No, I think there are several reforms that are taking place right now.
Most
let me start by one that is related with sub-sovereign or subnational governments. That's a particular challenge because of the structure of finance. The sovereign cost of funding puts a limit on how much we can actually reduce the cost for a sovereign. So it's a very interesting problem that I think we already are about to solve. If we do some kind of a financial engineering using local currency and hedging strategies, additional to some mix of guarantees, we will be able to reduce the cost for some subnational governments, so we could have non-sovereign loans for these entities. But my reflection on that is, it won't be for everyone, no? I mean, and to the same extent that my other colleagues were saying, each time we deploy a financial solution in Latin America, there will be countries or regions that they can take it. They have the private sector there. They have access to markets. Some other countries no. The case of IT is the extreme one. We already mentioned it. So reforms related to how to deploy guarantees, which is an instrument that is not used that often. I think that's important for Latin America, because most of the countries in the region have market access. Some of them are dependent of the MDB, but has some kind of issues in the international markets. The most recent one is Paraguay. For example, they issue guarantees in the international market, so they have access and they can use this instrument. So the instrument related to provide hedging exposure, transfer risk, I think there are the ones that actually are about to be materialized at least at the IADB. The second one is more important, I think, is bringing the concept of vulnerability when you take decisions about concessionality. That is something that has been discussed for years. I mean, even when I was kind of initiating my career, people were talking or criticizing why the MDBs are providing funding based on the level of income. High income countries shouldn't have access to this. Low income countries should have access. But at the same time, on the other windows, the MDBs are talking about social gaps, financial inclusion, gender inclusion, all that aspects that are not being taken in the decision. So right now we are about to launch a very, I think, innovative reform in terms of how do we bring vulnerability in those decisions. Right now, since we replicated what the IMF and the World Bank decided at the Bretton Woods, practically we use the income rule in order to provide this kind of funding. I think bringing vulnerability could help you to not only to provide to the poor countries, but also to the middle or high income countries in Latin America that still face vulnerabilities or they need to be resilient. High income does not necessarily reflect, I think, on resilience. And I think that's one of the most important reforms that are going to be happening at the IADB. So I already advanced in Ilan Golf and doesn't find out that. But I think that's one of the, I will provide just those two. So.
Thank you very much. I'm afraid that I have to invite you to continue this extremely rich and interesting discussion while having lunch, because I'm afraid we do not have time for the interaction with the audience. Thank you very much. We've not been a very disciplined panel, but a very rich one. And I must say that a very interactive, a spontaneously interactive one. So I think that I skip any kind of conclusions. It was, I think that all of us can easily get into them. Thank you very much, and look forward to continuing this discussion more informally. Thank you.